Good day, ladies and gentlemen. Today we'll be talking about the new Nigeria tax reform, which has taken effect from January 1st, 2026. This is coming to you from the stable of Selendy Consults Limited. For every of your questions, you can put them in the comment section and they will be replied to. Follow me as we move on with the breakdown of the tax reform. What is it exactly saying? And you will be blessed. So let's go. What can we say about the new tax reform? The Nigerian government has enacted a comprehensive overhaul of its tax system. The Nigerian government has looked deeply into the tax system, and which is centered around 4 landmarks. You can see that the laws are designed to simplify the administration. It's not to burden us, it's not to put burden upon the citizens, it's not to put problem on the citizens, it's just to burden the tax base and align it with the global standards. So, as we all know, starting from January 1st, 2026, these reforms, they took effect. Now, what are the goals of this new tax reform, this 2026 tax reform? Number one is to make taxation simpler. It makes it simpler for every one of us, even to the people that are not educated. Number two is to ensure taxation is fairer to everybody. It's fairer to all of us, to the rich, to the poor, to the middle class, so that it will not just be one set of the sector that will just be paying, but every sector of the organization or of the country will be paying. Then it's widening the tax base. Before, the tax base has just been for a small quota of people, but now we have a lot of people in that net, which will help us. It will not just be that one set of people are paying and another set of people are not paying. Then this new tax reform helps us to go fully digital for compliance. If you have not been digitalized, this is high time you started digitalizing your organization, what you do, your personal accounts. And so those are the goals of this reform. Then these tax reforms are gotten from 4 new tax laws. As it has been that they are Nigerian Tax Act 2025, which define the taxes and the rates applied. Then we have the Nigerian Tax Administration Act, that's NTAA 2025, which deals with filing and payment processes. The Nigeria Revenue Service Act, which empowers the FIRS. Then the 4th tax law that this reform was gotten from is Joint Revenue Board Act, JRBA, which harmonizes federal and state taxes. All these acts, they make the tax reform easy to access and helps us. It helps us to know how and what and which is expected to be applied. Then we move to one of the key aspects of the new tax reform. One of the key aspects of the new tax reform is the pay as you earn system. It's so key because it deals with the employees and employers, whether from the private organization or from the state organization. Now, what do we mean by the pay as you earn system? It is the it is a system in which the employer deducts the tax directly from the salary of the employee before the employee gets his or her salary, and is being remitted to the state internal revenue service where that organization is situated or is resident. And it deals with ensuring that income tax are collected at source. And this Paye system is also simplifies compliance for individuals. As we all know that presently, if you are earning less than 800,000 naira in a year, you are not expected to pay personal income tax, which is under the payee. That's pay as you earn. Now, what are the impact of this new reform on the salary earners? Number one is exemption of income less than 800. Just like I've said earlier, if you are earning 800,000 naira, this is no longer news. If you're earning 800,000 naira annually at the end of the year, you are expected not to pay any personal income tax. But if you earn more than 800,000 naira, you will still see, as we move on in this video, you will see how it's being calculated, how you can work around it. There is a new tax band that is given for personal income tax system. Okay, so what is the impact of this new reform on the salary earners? If you earn less than 800,000, you are exempted from tax. If there is CRA abolished, there is abolishment of CRA, Consolidated Relief Allowance, which was replaced with a rent relief. Then the rent relief that we are talking about here is a lower of 20% rent or 500,000. Now, in this new tax reform, there is introduction of rent relief, which will help an individual and employee to reduce his or her tax depending on the amount he or she is paying as rent. Now, this is not just rent by mouth. There must be evidence shown that this is the amount you're paying for rent. The details of this is that if the rent relief is a lower of 20% of the rent or 500,000, which one is lower? That means 20% of your rent, the amount you're paying for rent annually, or 500,000, the one that is lower will be picked so as to reduce the tax you will be paying in this new year. Now, we have the way they are being calculated. Pensionable emoluments. We have basic housing, transport allowances. There are other deductible expenses that will reduce the employee's tax, and in this new tax reform, which will make the tax that the employee is paying to be lower. So we have deductible expenses. They are pensionable emoluments, which include basic allowance, housing, transportation. There is a calculation. We'll get there, we'll see it, we'll see how it's being calculated. Employee contribution under pension, which is 8%, is deductible. Employer contribution under pension, employer is expected to pay 10% under the contributory pension scheme, and is expected to pay 10%, and employee expect to pay 8%. It's only the 8% that is deductible under the new tax law, even from the old tax law. Okay, other allowable deductions, they are NHIS, National Health Insurance Service, National Health Insurance Scheme, sorry for that, National Health Insurance Scheme. Then NHF, National Housing Fund. We have life insurance premiums. There are other allowable deductions that will make your tax reduce. There are approved donations with documentation. There must be evidence of this. Then there are targeted reliefs like the rent relief, which replace the consolidated relief allowance. Okay, so what are the step-by-step in payee computation? This is done like I said earlier, that this computation is done by the employer, and it remits the amount and the details, the returns, to the state internal revenue service where the company is situated. Number one is you determine the gross annual income. Number two, we identify the pensionable emoluments. Then we compute the rent relief. Then you're expected to deduct the allowable items. Then we apply the progressive tax bands. Then we divide the annual tax by 12. Now you can see here that the old tax band, we have first 300,000 7%, next, and all that, like as it's seen in this video. But the revised tax band is from 0 naira to 800,000 0%. From 800,000 naira to 3 million, you pay 15%. 3 million to 12 million, 18%. 12 million to 25 million, 21%. 25 million to 50 million, 23%. And above 50 million, 25%. So let's see how it's being calculated. Let's do a practical example. Let's say a practical example of how the tax will be. Now in this example, we have John Doe, who is the employee, and his gross annual income. When we talk about the gross, this is the income that you earn when no deductions have been made. That's annually. At the end of the year, maybe for 12 months, the amount you earn when no deductions have been made, that's your gross annual income. Now, so for this employee, John Doe, he earns 2.4 million naira as gross in a year. That means 2.4 divided by 12, that's 200,000 naira. He earns this 200,000 naira monthly gross when no deductions had been made. So we want to break his income down. Pensionable emoluments, we want to break it to basic salary, which is 40%, housing allowance, which is 30%, transport allowance, which is 10%, then other allowance is 20%, making it 100%. So 40% of 2.4 million gives us 960. 30% of 2.4 million gives us 720. 10% of 2.4 million gives us 240. And 20% of 2.4 million gives us 480,000. Okay. The next one is the statutory deductions that are necessary. We have 8%. The pension is 8%. 8% of basic salary, housing, and transport. Addition of the three gives us 1.9. 8% of it is our pension, which is deductible. And NHF is 2.5% of the gross income. That 2.5% is statutory. Okay. NHIS, National Health Insurance Scheme, is 5% of the basic allowance, basic salary. Okay. Then the total deductions we have is 261,600, like it's shown here. The annual rent paid by John Doe is 400,000 naira in a year. And we are saying, the relief is saying that 20% of 400,000 or 500,000, which one is lower, will be picked. Now, 20% of 400,000 is 80,000. And we have between 80,000 and 500,000. So the rent relief for John Doe is 80,000 naira, as it is the lowest. As it is the lower between the two. Okay, so now we can see our chargeable income. We have gross income of 2.4. We less deductions plus the rent relief, which gives us chargeable income of 2.2 million and 58,400. So how do we do it now? This John Doe earns more than 800,000 naira in a year, and we want to see how the tax band rates will be applied to him. Okay, now this is the first thing. First 800,000 naira from that two 2,058,400. We first of all remove the 800,000 from it. After removing the 8,000 from for that first 800,000, you will be having 0%. So the next one, the balance that remains from the 2,058,400 is 1,258,400, which is still between the second band, which is 800. Between 800,000 and 3 million, you have to pay 15%. So we apply 15% on this, and the total gives us 188,760. Now that's the annual amount that is expected for John Doe, who earns 200,000 naira gross income monthly. Is expected to pay 15,730 naira in a month. So we can see how simple and how relief this is. Definitely his tax has reduced from the previous one. So that helps us with the payee. Now let's move on to the in the next video. As we have seen that we are done with the pay as you earn. If you have any question on pay as you earn system, which deals with most employees, put your questions in the comment section. In the next video, we'll be talking about self-employed, how this new tax reform help them and affect the self-employed, freelancers, and remote worker. Thank you for listening. See you in the next video.